What's up, investors, and welcome back to the Investors Club. Here on this channel, we're all about earning passive income through dividend growth investing. Today in this video, I want to talk about my second biggest holding, and that's AT&T. As you can see here, AT&T is currently trading at $28.63. It's been under $30 for quite a while now. It's been downtrending for the past, obviously since COVID. But it was on an uphill climb for a while, but then it's kind of lost traction. It keeps going down and, it doesn't have that much trading volume, which I think is kind of surprising just with what AT&T is doing to transform their company. But my market value for this stock is around $1,450. I am down on this stock. I bought in for $30, and I'm down about 4%, or almost 5% at $71. I have a little over 50 shares, and I bought into this stock because I see both growth potential and a nice dividend. The dividend is at 7.22%, which is really nice for a company of this magnitude, in my opinion. Some people think that this stock is dying, but I'm going to explain why I think this stock not only has potential to grow, but also grow their dividend like they have for the past, I think, 36 years. They've grown their dividend. So, they prove every year that they have cash flow to increase their dividends. So I found an article on Seeking Alpha that I liked. Basically, the first thing I liked is how they plan on transforming. So this year is expected to be a transformational year for the company. It is focused on executing across its diverse asset portfolio. So here they talk about how what they're going to do with 5G and FirstNet. And FirstNet, to my understanding, is going to be a kind of a private network for first responders to maybe help, respond times drop, which would be great. That'd be awesome. They're going to get into fiber-based connectivity, or an increase on their fiber-based connectivity. They are getting into software-based entertainment with HBO Max and AT&T TV, and they want to increase their customer engagement. Now, the things that I like there is obviously their 5G plan. 5G is the future of, wireless connectivity, or not wireless, but telephone network. And FirstNet, like I said, with the first responder thing, I think it's a great idea. The other thing I really like is obviously with HBO Max and AT&T TV, with HBO Max, they're getting into this big expanding industry of streaming services, which I know there's a lot of competition, but I still think there's room for different companies to get into the streaming atmosphere. And with AT&T TV, it kind of sounds like that's going to be more like a satellite provider type TV. It's kind of because they're going away from DirecTV. They bought DirecTV several years ago for $49 billion, and they're trying to get rid of it. They're probably going to take a big loss on it. That was a bad business move at the time. Shareholders voted for them to get rid of DirecTV, so that's what they're doing. But I think it's better to get rid of it now than in 5 years, 10 years, when the price of that is just going to keep going down. Increased customer engagement. So they want to, I think that kind of goes hand in hand with the HBO Max and AT&T TV. That's going to just increase engagement and possibly bring more people to AT&T as a service. This middle thing just touches on some details, managing impacts of COVID and things like that, just saying how they're effective and efficient in everything they do. This last one, solid balance sheet and deliberate capital allocation. Like I said, investing in strategic growth areas with fiber, 5G, FirstNet, and HBO Max. They're committed to supporting the dividend. 36-year record of increasing. Now, that's something you really like to hear them say. They're committed to supporting the dividend, and it sounds like they'll continue to increase it every year is their plan, which really, that's just good to hear that you can get into the stock and they are, committed to that dividend if you're a dividend investor. Another thing I really like to hear is reducing debt. AT&T has somewhere around $196 billion in debt. A lot of that coming from their DirecTV deal and also their Time Warner deal, which they bought in 2018 for $84.5 billion. So that right there, they bought DirecTV for $49 billion, and they bought Time Warner for $89. So that's pretty much all of their debt right there. But they're committed to reducing that, and that's another thing that really excites me for what could happen with this stock. And then continued portfolio review, monetizing non-core assets. So that little snippet right there just kind of pushes me to want to buy more of the stock. This week, I think I'm actually going to buy some. I'm planning on making a video of, buying a couple stocks, adding to ones I have, and also adding a couple possibly that I've been researching. Another thing I wanted to show was continued financial performance. Despite the difficulties of COVID-19, AT&T remains committed to continued financial performance. So in this little picture here, we see that the estimated earnings per share was down here, and in 2019 and 2020 both, they beat those, greatly. So it's increasing. 2020's earnings per share down, obviously, because of the COVID, but it's only down 6 cents. So, that's pretty good, regarding what's all been going on in the economy and everything. I just hope that we can get this COVID figured out and get past this and get back to our regular lives. However, I don't want to say this to sound rude because I really feel for all the families that have been affected. But during this down cycle, it's a good time to add to your portfolio because stocks are on sale. I'm not saying that I hope it stays down so I can buy more stocks. I'm just saying it's an opportunity. It's a really bad, tragic situation that we're in, but it is an opportunity to get into the markets at good prices. Let's see here. Revenue of $41 billion. Looks like impacts about $2.8 billion of COVID, but I like seeing this solid cash flow at $7.6 billion of free cash flow. Second quarter dividend payout ratio of 49% and continued investment in strategic focus areas. So those are the reasons why I really like this stock. I'm going to add to it, definitely. I honestly believe that this is going to be one of the last times you're probably ever going to see the stock under $30, because a lot of people think, this stock is really downtrending. This company is kind of dying, but that could be true if they weren't trying to get into different areas, like with the HBO Max, AT&T TV, even with them buying Time Warner and DirecTV. Not great business decisions, but at least it shows that they are, at least trying to, reach out and try something new to gain, more profit. So, do your own research on this stock. I'm not any type of an advisor. This is just my opinion, and this is just for entertainment purposes. So do your own research, but I really believe that this is one of the last times you'll ever see the stock under $30. It's a great entry point with a 7.22% dividend yield. Some people think it's a dividend trap, but I just don't see anything in this company that makes me think it's going to keep downtrending. It's just too big of a company. They've been around so long, 36 years of increasing the dividend. I mean, this is a committed company that is going to find different outlets to make money. Now, the one thing that does scare me is that $196 billion in debt. You know, they say they're committed to paying off that debt, which is great, but that's really the only, I mean, there's other things, but that's the main reason why, yeah, it's kind of a up in the air. That'd be the only reason, because of that, for me. There's other things that I think could perform better and people could, this company could do better at, but for the most part, that's my main concern is the debt. But, I think this stock has great potential. I don't know if it'll hit, its highs again soon, but within the next 5 years, I see the stock easily going over $40, So right there, that's almost a 50% return on investment, just if it hits, $40. So, like I said, do your own research, but I really think that this stock is one to be watching. We can take a look at it here on Seeking Alpha. It was at around, 35 before the pandemic and dropped clear down to 26. I don't think people think it's going to go back down to 26 and test those lows again. I don't think it will. I think it'll stay in this 28 range until everything starts building up, and then we'll see it, push up to this 32, 33 range, and then if it busts past this 33 range, I think it'll go to 36 pretty quickly. So I think there's a pretty good chance that you can turn the stock around within the next year, at least a year. This stock's going to be profitable, I believe. Like I said, do your own research. I'm not telling you to buy it, but I just don't see how this stock's going to go any lower. And if it does go lower, I think it'll hit 26, retest those lows, and come right back up. So if you want to, you can take that how you want it. I think this company is not going to downtrend for years to come just because of what they're doing, how they're transforming. I see some pretty good potential here. Let's see what else here. Earnings per share, 316, PE of 9. That's good. Actually, there is quite a bit of volume, 28 million. I thought it was down a little bit, but it's just looking good to me. I know there's some articles I've read that people are ragging on it pretty hard, but I'm definitely going to add to it. Let's look at the 10-year just for fun. See, it's pretty sideways, and that's another thing that's kind of concerning. The stock price has just kind of trended sideways, but as a dividend investor, trending sideways is fine as long as you're getting that, that dividend payment. A sideways trend isn't that bad unless, the company starts to die, then you can sell off and reallocate. But, well, guys, kind of rambling here. So that's the end of this video. If you enjoyed this video, if it added any help to you, I'd really appreciate it if you like and subscribe. It really helps my channel, and I'm just starting out, so any sort of help would be greatly appreciated. So with that, have a good day, guys, and thanks for watching.